Welcome to lesson 3 of CRT Swing Trade full course. Hope you all guys doing well. In today's lesson, we're gonna talk about market structures and bias. This is a very important class that all you guys need to know about in order to execute a perfect swing trade analysis. All right, but before we begin, I want to remember you guys this lesson in specific, lesson 3. All right, we must hit 300 likes and 300 comments in order to I release the lesson 4. All right, so I count on you guys for this goal: 300 likes and 300 comments. And if you're not subscribed, what the fuck you're doing with your life? Okay, just hit the subscribe button. Okay, so no further ado, let's go to the class. Today we're gonna talk about market structures. So structures, and we're gonna talk about bias. Bias, what the fuck? All right. So why these two are important on CRT? You must be wondering, because in all the YouTube contents you see around, just teaching CRT like it's let me take my it's a 3 candle, and like this, and you can do it anywhere and fuck it, and don't do it. All right, because you need to align with the confluences. In the previous lesson, we talk about key levels. That's important thing to align, right, with your CRT trading. And I'm gonna draw this, okay, and this you're gonna confluence with structure and bias, because we need the more confluences we can get of the market. All right, so said that, let's dive into our first topic. There is structures. Okay, and I think you all guys are thinking right now like, oh, okay, I know structures, but in fact you don't know, right? And I'm gonna prove you don't know, because you think this is a market structure. Okay, and then you have your structure here, you have your boss, and if the market comes here and do this, you have your change of character, right? And not quite, right? So remember, all the market is moved from a liquidity point to another liquidity point. Okay, and this is the bias, but I will talk later. But you need to have the structure to understand the bias correctly. Okay, the structure, in fact, we are looking for, and I don't see anyone talking about this correct structure in the internet. It's something like this. Okay, you have this low, high. Okay, now you have your boss. No. Okay, you have a valid structure only when the price sweeps an old low or old high, whatever, and creates another one. So here, okay, here in this point, here and here, you got a valid structure. Anything out of this, okay, this sweep right here, and this low the sweep creates, are internal liquidities. So in this case right here, this is just internal liquidity of this leg, right? Probably like a leg before here, the swept old low, right? You have this internal liquidity, right? External liquidity, sorry, we talked about it in the previous lesson, right? The external liquidity. Now you have internal liquidity. Price probably breaks down here, a false breakout, right? False breakout, induce players to sell here, short here, and then market sweeps this old low, and then wreck all those players are shorting, right here. So this is the market moves. Actually, this is the most, like, the 80-20 of the market structures. All right, the structure you want to seeking, it's not this kind of structure. Like, this is not your bias. Okay, the structure you're seeking, it's when the market sweeps right here and then create a new one. All right, so this is your main structure, right? I hope it be clear, because we use this to confluence our bias and our overall read of the market, right? So we have your structure. Remember, external liquidity and internal liquidity. And I want you guys connecting the dots between the lessons, because in the past lesson I talked to you guys about external internal liquidities, key levels, right? And now you're connecting this to structures, right? So yeah, of course we have right here a key level, internal liquidity, remember, external liquidity, drop liquidity, right? And then external liquidity as well. And this is your correct structure. Okay, but how we can see this in candles, because in lines and drawings is pretty easy, right? But let me show you guys right here. Right here you have uh, a correct, okay, structure that I'm talking about. Look here, I want you guys pay attention here. We're gonna talk about 3 candles, but no, it's not the time. I want to show you this first. But we have here sorry, a high being swept and then creating a new low, right? As the same way we creating a new low here, we are sweeping this low and then we're gonna create a new high right here, right? So here, right here, we have our breakout structure. At the same point here, we have a breakout structure. So here, in fact, here is the true market structure shift. Remember, because this high creates this low. Once we break through this high, then we have our structure shifted, right? Because we swept this high, then create a new low, then break the old high, the valid structure. So we have this structure. Let me just erase all this shit that I draw here, right? So you swap this high here, creating a new low, right? New low, swept. Swap a new low, break this high here, right? So here you have your market structure shift. So now, technically, your bias, it's a bullish bias from here. Okay, and I want to talk about the 3 candle, because 3 candle is a very important concept you guys all should know, because sometimes you are seeing the high time frame, you don't have this, like, this structure, more drawn out structure in your charts, right? Like if we go to do 1 week chart, you gonna see practically some candles. Okay, you don't have like that like book drawing that I taught you guys. So the 3 candle, okay, it's basically you have 1 candle here. Fuck, let me draw again, that's too ugly. Okay, 1 candle here, right? And the second candle, it's going to create a high or a low, whatever. Okay, can be with wick, without wick, doesn't matter. All right, and the third candle, it's gonna break above or below the first candle. So what we got here, if you look correctly, this candle, okay, if you draw like a wick here, what you got here, this structure, you have exactly this. You create a high or a low. Okay, so this, it's really important to you guys to mark the correctly structures. right? Let's back into the 4-hour chart right here, where I am showing you guys like this one here. Okay, this guy, 3 candle, you see? Same thing here, 3 candle. It's not necessarily 3 candles, okay? The 3 candle is more for more higher time frames, but you have to understand the concept of that, right? So like here you have a perfect example. Look, you have your first candle right here. What the fuck is happening, bro? You have your first candle here. You have your second candle sweeping previous candle low, and then you have your third candle breaking your first candle high. So here you have a valid structure. You seen this? Because this movement right here creates a new low. Okay? So I want you guys to connect all the dots I just given to you, right? So this is all about, you need to know about the market structures, okay? Look, same thing here, 3 candles, right? First candle, second candle, swap, second candle, first candle low, third candle creates a high. So here you have a valid structure, okay? And plus you have the sweep. You begin to see the market just move from one sweep of liquidity to another, and that's exactly where we're going to be your bias, right? Because besides of all that you already know, like looking at this chart, this is the euro chart today, right? We are currently in an uptrend. We are currently bullish. Why? Why we are currently bullish? Well, let's dive into more, okay? Because first we have this swap, and then we break this low, okay? Break this low, creates a valid one, and break this high. So from this moment, we are bullish, right? We need to break a valid low, okay, to validate the order flow begins to bearish. Sorry guys, I have a little headphone problem here, but solved now. But in order to reverse down, right, we need to lose the valid low, okay? In this case, the valid low, it's this, right, here. And after that is this valid low here. And after that is this valid low here. And after that is this valid low. So the order flow, it's going up, right? So this is one way to see your bias, right? And the second way is the most effective way I want to talk about, guys. It's the price moves from one key level to another key level, right? So what price is currently doing here? I want you guys to pause the video and try to understand. Let me just zoom it out here. What's currently going on here? Pause the video. All right, as usual, you don't pause the video, right? The price here, it's moving upwards from where to where? From here to a key level, right? So you have a key level here. Price, it's always seeking liquidity. Always seeking liquidity. So a price always moves from a key level to another key level, right? And you can catch the move from a key level or towards a key level, sorry. Right? So you can catch the going through a key level movement and after sweeping a key level movement. Okay? And where most likely the price going to go after this sweep here? This key level. this external liquidity right here. This is structure liquidity right here. Okay. Oh, but if the price doesn't sweep, the price just putting some bearish, oh, so bullish structure right here. So you have your bullish structure. You are like 100% bullish, right? Until where? Until you find another key level right here. So this is a potential reversal point. So you know, to this point, right, you have a key level here as well, but this key level is pretty near here, so most likely price take this both key levels at once. But if the price just come back and put these structures high here, okay, most likely the price gonna be up here, because here we have liquidity, right? So the price always movement is seeking liquidity. The price always moves seeking liquidity. So your targets, okay, and you can take trades to a key level or from a key level, right? But remember, the price always moves to one key level to another key level, right? So if the price sweeps here, you know, if you see a sweep of liquidity here, if you see a candle with a wick, like a real wick here, okay, and if you see or some CRT pattern right here, okay, you're gonna see this, right? You're gonna see the distribution right here until where? Until your key level, your next key level right here. It's not that hard, guys. Okay, market just seek liquidity all day, all week, all year. It's all the same thing. If you just recognize the patterns, it's easy. Okay, market's seeking liquidity. Okay, look, liquidity. Go to where? Key level. Took a key level right here. Right? Oh, key level right here. Where's the next key level? Yeah, here or here. Okay, sweep liquidity. Key level here. Right? Here. Probably sweep liquidity right here. Yeah, sweep liquidity right here. Look, liquidity sweep right here. Go where? Next key level right here. Price go. It's so fucking easy, guys. Okay? And I guess it's this for today's lesson. We talk about valid structures, right? And bias. And with that, you need to connect the dots, okay, with the previous lesson. If you don't see the previous lesson, I will drop the link right now. Bye bye, guys. See you in lesson 4.